Hey everybody, welcome back to I Know a Guy. I'm Anthony, and this is the podcast where connections thrive. Each episode, we spotlight inspiring entrepreneurs, professionals, and individuals doing amazing things. Together, we'll grow your circle, spark collaborations, and discover new opportunities. Today, we're meeting Geordan Waldman, a certified liability advisor specializing in strategic mortgage planning and debt management to help clients build wealth. With a background in applied physics and lending, Geordan focuses on reducing interest expenses, improving cash flow, and aligning debt strategies with long-term financial success. How are you doing today, Geordan?
Doing great. How about yourself, Anthony?
Pretty good. It's a Monday, so looking forward to the week. I know we were talking off camera. We both got some pretty busy weeks, so I was really happy that we were able to squeeze this in. But to start off, where are you calling in from? Where are you located?
I'm in Thousand Oaks, California. It's about an hour north of LA.
Awesome. You've been there forever, or are you newer to the area?
I've been here since 2010. Before that, I was in Colorado. That's where I grew up, and I was born in Nevada.
Awesome. Okay. Well, if you have friends coming into town that have never been, visit you, where are you taking them? What are you doing, and where are you going for dinner?
Ooh, what are we doing for dinner? There's a lot of good ramen places in the area. There's also a great Brazilian place. They serve really great fish stew. Highly recommend.
Awesome. Okay. Well, what are you doing for fun then with them there? Where are you going? What are you doing?
Um, so we're about an hour from the beach, so we typically take people there. We've got a great Civic Arts Plaza, biggest one between Los Angeles and San Francisco. So you get a lot of cool bands that come through. A few months ago, we had ZZ Top, if you're a classic rock fan. Um, and so we often take people there, and that's where we go.
Awesome. Well, that sounds fun. So, okay. Well, what can you tell us about what you do?
Sure. I'm a certified liability advisor and mortgage banker. Think of me a little like a financial advisor, but instead of managing assets and the way your cash gets invested, I look at the way your cash flow gets tied up in things like your mortgage, credit card bills, car payments, personal loans. And I find ways to help you reduce that interest expense so you have a little bit more money at the end of your month, or I help you pay those down more effectively so you're saving a lot of money in the long term.
I got you. Well, how'd you get started doing this? Is this something that you've always wanted to do or kind of stumble into?
This was a very roundabout path that I took. I started, I got my bachelor's in applied physics and was immediately recruited out of school to be a programmer for a Navy contractor. Um, didn't really love waking up before the sun had come up, going to a windowless room and staring at a computer screen all day. And by the time the day was over, the sun had gone down, so I didn't see the sun most of the week. Um, so jumped out of that, jumped into some web design, was managing our family business, which was an in-home personal training company. Um, got a master's degree in gerontology, which is the study of human aging. Then COVID hit, so I needed something to do to make some ends meet, and so jumped into the mortgage space in 2020, and I've kind of been in and out of it ever since. And recently got this designation as a certified liability advisor, which allows me to kind of combine my skill sets in gerontology, which, some retirement planning stuff, some analytics from the applied physics side, kind of wrap them all up into one neat little package.
Yeah, I always love the stories that kind of wind through a little bit. You're like, how did I go from here to here? And they connect, and you're like, that makes sense. But from the outside looking in, you'd be like, applied physics to no, that does I don't track. So yeah.
Yeah, it seems very scattered on first glance.
hmm Yeah, that's why it's always fun to hear that story because you're like, okay, now I get it. So, obviously you've been doing it for a while now. What do you love about what you're doing?
I love the way that we are able to change people's financial trajectory. We can help them get to the next stages in life where they're setting up wealth building and legacy wealth. They can go from struggling to a clear path to financial victory, debt managed, wealth built. It's just great how we can shape people's lives in such a positive and impactful way.
Awesome. Um, what are some hard won lessons that you've had along the way that, just as an entrepreneur, we all go through, the ebbs and the flows, and we have some things that maybe we didn't see coming, that you would kind of advise newer entrepreneurs starting off maybe in your space or just maybe somewhere else that you would say, hey, look out for this, or maybe take a heed of that.
Um, I would say for new entrepreneurs, finding opportunities to network is the biggest way you can grow your business very rapidly. Just advertising to your clients may not be enough. Just sitting behind your computer screen may not be enough. Finding ways to connect with people one-on-one, that's really where the growth to your business, you find unique opportunities, you may find unique partnerships that you weren't even thinking of. That may be the thing that turns your business into success.
Yeah, that's absolutely true. You don't know what you don't know. So you can take inspiration from other people doing completely different things than you that you wouldn't have otherwise have known, or you might find mentorship or just make friends that you refer back and forth with and things like that. So yeah, it's super super valuable, and it's never too early to start networking. So awesome. Well, what would you say your average client looks like, your average avatar, or what are the pain points that they're going through that if they're dealing with XYZ, you're the person that they should be talking to?
Sure. I predominantly help homeowners who are serious about their money find ways to reduce the cost of home ownership. Um, and that kind of comes in a wide variety. Usually they have a mortgage. A lot of people these days have been thinking that, oh, I got great pandemic rates. Back in the pandemic, you were seeing mortgage rates in the twos, threes. And so they've shackled themselves with these golden handcuffs that they're afraid to refinance out. Meanwhile, they've built up all this equity that they can't access. And then on the flip side, they've racked up all these consumer debts. Usually, 30% of people have at least one maxed out credit card. So we help them kind of wrap those up and leverage that equity so that they can either pay down their mortgage very quickly, reduce that consumer debt and credit card, basically free up more money at the end of their month. Because really, we don't, people may be happy with their rates, but we don't really live by mortgage rates. We live by cash flow. And if we don't have that cash flow at the end of that month, that starts squeezing us. We get stressed. We become unable to handle a unexpected expense. So if we can free up that cash flow, so you have more money at the end of your month, you're saving money, you're building that wealth, that gets you into the next stages of life where you're comfortable and can relax about money.
Gotcha. So you mentioned earlier networking and finding people to kind of work with. What do your power partners look like? What are some collaborations that you've been able to make, or what are some of those referral partners look like for you?
We predominantly work with financial advisors, insurance agents, basically anyone in the finance space, um, who help people manage their assets, but we don't manage those assets. We work on the other side of the balance sheet. So we're not really competing with them. We're being an add-on to what they're doing. So we help their clients free up that cash flow so they can get into more of those investments and wealth building. Um, so yeah, we work with financial advisors, insurance agents who are doing life and health securities, stuff like that. Typically, they may have a client that is just struggling to hit those target premiums or those goal metrics to get to their financial independence number, which is basically the goal that financial advisors and insurance agents try helping people get to, so that once they've reached that number, you can retire safely. You can keep working if you wish. You can slow down. You can kind of, you have more of that flexibility at that point. And so we help people get to that by reducing that cash flow going to all those debts.
Okay. How can strategic mortgage planning help homeowners build wealth and achieve financial freedom?
Well, if we look at our mortgage, it is the biggest bundle of debt that we sign up for, right? It costs us hundreds of thousands of dollars. It is a 30-year debt. And if it's not managed well, it completely erodes your financial future. It is the basis for many people's financial future. It's the biggest asset we own that we've leveraged our way into. It Little changes in interest rate or even the product that you're in can dramatically shift how much money that you end up saving. For instance, I had a couple that were 3 years away from retirement, and they were planning on moving. They built up phenomenal equity because they've been in a property for 20 semi-odd years. Um, and they were planning on moving, but they were going to sell the property they were in, move into another one, and that would have gotten them an extra $100,000 for their retirement planning. But by strategically managing their debts, uh, we did an analysis that if they bought the property now, rented it out for 3 years, and then moved in after the 3 year period for retirement, they would have saved themselves an extra $500,000, especially leveraging this tool we have, which was the HomeSelect.
Okay. What are the biggest mistakes that you're seeing people make with debt management?
Uh, Once again, a lot of people have built up equity, but they've gotten themselves in these consumer debts. And really, the game of money is played via compounding interest. When you are investing, you want the greatest rate of return on your compounding interest. But when you are taking out debt, you want the lowest rate. When people rack up this credit card debt, um, they're receiving interest rates in the 20+% range. And that's a lot of interest that you're paying just to kind of leverage these credit cards and basically live a little beyond your means. But then you've racked up this equity in your property, and by not strategically using that, you're paying a lot more money, and it's like burning money. It's hurting you long run.
I gotcha. You mentioned HomeSelect. How does HomeSelect work, and how can it help homeowners maximize their financial potential?
Sure, it's an interest cost savings loan. It's a first position HELOC tied to an FDIC checking account. As your cash flow comes in through that checking account, the same as it would, you get your normal deposits or W-2s or however you make your income. While that cash is in that account, it is saving you from interest expense. Most people make basically the entirety of their mortgage in about 3 to 5 years, and just in income. By leveraging this tool, you can save yourself about 20 years off your mortgage. So you're paying it off in 8 to 12 years. Most people are saving hundreds of thousands of dollars in interest expense. And that equity that they're building is now liquid, so they don't need to refinance or pull out, put on a HELOC basically, or sell the property in order to access that cash. That cash is that equity that they've built. It's now liquid. So you've turned your house into your own bank for those that qualify.
That's really interesting. For Is there anything that I missed about HomeSelect that you wanted to add, or just in general?
Um, I would say it is one of the most disruptive mortgages on the market. If it replaces your 30-year mortgage, you are saving substantial money. You are There's more safety in this mortgage than your standard 30-year mortgage. In the 20 years that it has been around, as far as we are aware, there has been zero foreclosures. It offers you so much more flexibility to pay as you kind of see fit. It accelerates your payoff because you're paying principal first rather than interest first. In your standard 30-year mortgage, for the first 5 years, 80 to 90% of your payment is interest. And most people refinance their mortgage every 3 to 5 years, either to get a better rate or to pull out some cash from their equity to do repairs around the house or what have you. And so you're stuck in this sweet spot where mostly you're paying interest, and that's why 60% of people never pay off their mortgage.
That's interesting. Yeah, I never knew about that, and I'm sure a lot of people out there don't, because it's just kind of not taught so much. Unless we're talking to somebody like yourself, it just kind of goes, and it's just we deal with it. We don't make that realization. So, for those out there that want to know more, that have questions, how can they find you? Where can they get a hold of you at?
Sure, you can always text me at 805-368-3477. Or if you want more information about the HomeSelect and the powerful ways that it has shaped and changed people's financial landscape, you can go to gohomeselect.com. We have a lot of great resources there, a lot of videos describing how it works and the ways people have used it. We also have webinars. You can going to gohomeselect.com. You can go to the More tab and sign up for a webinar, and we go in depth on how this loan works and go through some simulators where you can see a side-by-side comparison for the HomeSelect versus your standard 30-year mortgage and how it can save you tons of money.
Perfect. And I'm gonna put all that in the show notes so people don't have to hunt for it. Just make it really easy. Just click and find it. If anybody would like to get in touch with Jordan, absolutely do it. You're gonna walk away learning more than what you know now. If you've had a mortgage and you've been paying for it, and like he said, if you're refinancing it every 3-5 years or however long, take a look. You know, you're like I said, you're gonna learn something. It might be the best thing for you. So absolutely reach out, have that conversation. If somebody would like to get a hold of me, you can find me at ikag.me. You can find more episodes, subscribe to our newsletter, and connect with our growing community of awesome people like Jordan. If you or somebody you would know would like to be interviewed, you can also apply on the website. But Jordan, I really appreciate you taking the time and kind of going high level over this stuff for us. I know there's a lot more questions and we can dig into it way, way deeper. But let's all get out there, have an awesome day, and grow our circles. All right.